just let you know this webinar is being recorded and it will be sort of uploaded on the website as to when it's all finished, and you can revisit it as and when. So yeah, welcome to my trading webinar, non-farm payrolls trading webinar. I've not done one for a while. I had a few IT related issues, meant that I couldn't do webinars for a bit, but I'm back in the game now, and we can talk about non-farm payrolls once more. So I hope you can all see my slides, and I'm getting some positive responses that that you can. And with that in mind, I'm going to just get into this trading webinar. Now, let's go. Before I sort of start, you need to have just seen the disclaimer, because I'm going to be talking about live market information. It's on your screen now, and I will be showing it again at the end of this presentation. Yeah, that's it's all there. Just read and understand that, because I'll be talking about live market information. So what are we going to look forward to in this webinar? I've got about 15 minutes before the data. We look at the current expectations of the market and what could drive markets in the report. The key markets I'm going to watch are Euro Dollar, Cable, Gold, DAX, all the big ones, and Dollar Yen mainly. Look at the yields as well, yeah, so we're going to cover all that. Now, in terms of what we've got to look forward to, I've got in the blue box at the bottom here just the forecast and what would constitute a weak report and a strong report. Now, the factors that you really need to consider going into this is exactly the impact that payrolls are going to have on the potential for a rate hike. Now, a June rate hike is entirely likely. It's incredibly likely. In fact, the market, since that FOMC meeting on Wednesday, the market has been strongly predicting that we're going to get a June rate hike. There's no real reason why we're not, well, especially considering the Fed's basically just entirely discounted the first quarter slowdown by labelling it as being transitory, and I think that the trends towards continued interest rate hikes are sort of fairly sound. The Fed's going for 2 more rate hikes this year, probably. I say probably because December's still in the balance to a certain extent. Yeah, 2 more rate hikes this year, 1 in June, probably 1 in December, but the 1 in June is now around about 74% likely. So it is quite likely. Now, this is the first payrolls of 2 before that June FOMC meeting, and I think that the market will basically, if it gets a couple of inline payrolls reports, it's going to be sort of pushing towards almost guaranteed hike in June. So that's basically what we'd be looking for today. An inline payrolls report would be pretty much fairly nailed on for a June rate hike. So if you get an inline report, then it should be fairly dollar supported. I think you'd be sort of taking that as how to look at it. And certainly, if you start to see the economic data in the States picking up, say like a strong headline payrolls number, tighter labour market, continued earnings growth, then that could begin a dollar recovery, because that would send yields higher. So that's the other factor to consider, whether the dollar starts to regain ground that it's lost against the euro and against sterling. So in terms of the data itself, we're looking for a headline recovery. We had we had 98,000 last month, which was a very big surprise. Actually, the market had been going for a very strong number. It had been expected to be around about 100, I think it's about 170, 180,000. But then when the ADP number came out really strongly, the market had been thinking, well, this could be a big number. But in fact, it came out very weak, 98,000. There was possibility of, or likelihood that there was a sort of weather-related issue, being that there was a huge snowstorm on the eastern seaboard of the States. But since then, since that has had an impact on the sort of 98,000, there could be a bit of an upward revision of that potentially, but it's likely to be sort of recovering back towards the 180 area, and generally speaking between sort of 150, 180, that's considered to be pretty strong for the markets, and sort of generating labour market strength really. Now, aside from the headline payrolls of 185 expectation, the average hourly earnings will get a lot of analysis, because you want to see average hourly earnings picking up. 2.7% is the average hourly earnings growth across the year, and the expectation is for 0.3%. Now that would sort of stick around about 2.7, 2.6% for average hourly earnings, so that would sort of maintain this growth. But sort of you got 0.1%. Maybe that would start to, maybe that would be considered to be a negative report, because so much focus is now being taken off this average hourly earnings, which is perceived to sort of filter into inflation, and earnings growth is taken as when people earn more, they will likely to spend more, so subsequently driving inflation. So the other sort of main aspects of the report I'm looking at is not necessarily the headline unemployment figure, which is expected to tick mildly higher to 4.6%, but the U6 unemployment. Now, U6 unemployment is sort of the whole package of unemployment really, all of unemployment, sort of the discouraged workers and the underemployed as well. So the it's sort of taken to be the true level of unemployment really. Now it's currently at 8.9%. Let me show you that chart. Now this is non-farm payrolls ticking. It has been sort of trending lower recently, but the underemployment, unemployment shows unemployed, underemployed and discouraged workers, as you can see here, and that's been ticking low to 8.9%, but you can see 2006-2007 it's sort of between 8% and 8.5%. Generally speaking between those years. So that would suggest that, and that was when the market was really had a tight labour market. So that would suggest there is still some slack to go in this run. And 8.9%, if that dropped again, that would be sort of again indicative of a tightening labour market. You would also be looking at the participation rate, 63% last time out. 63.0. Now if it's raised above 63.0, maybe to 63.1, 63.2, that would suggest that would be multi-year highs on the participation rate, and that would, but it could also be a driver behind unemployment rising, so watch out for that. Mild tick higher in unemployment could be sort of explained by sort of more people re-entering into the labour force, so that's so that would be a factor, or could be a factor in that. So all sorts of different things, but also we could, as I said here, there could be some upward revisions of prior months. Now, in terms of the impact on the markets, you'd be looking at a weak payrolls report, be dollar negative and safe haven positive. So when you talk about safe havens, you're looking at treasury yields going down, you're looking at the yen strengthening, you're looking at gold strengthening. They would be the big winners. So in your forex markets, you'd be looking dollar weakness, yen strength. Aussie and Kiwi. Now, Aussie and Kiwi have been under pressure in recent weeks from the decline, really, of commodities trades, and they've really come under pressure. And that could again be a factor if we get a weak payrolls report. Now, you'd also be looking out for gold to find a bit of support. Oil has been volatile, ridiculously volatile anyway, so calling oil at the moment is a difficult one in terms of on an intraday basis, because it's been so entirely sold off, but still. In terms of your inline report, I would still say possible muted reaction, a bit of spiking around, but I think dollar supportive generally is what we'd probably be looking out for there. So generally, volatility, yes, but on a limited basis, but again, dollar supportive. In terms of your commodity prices, again, volatility, mild dollar strength likely to be seen, which could actually hit gold to the downside purely because of the fact that I think that it would be sort of confirming that a June payrolls report is a June FOMC rate hike is increasingly likely, and indices would most likely have limited reactions. In terms of your strong report, again, you'd get trending moves, probably of dollar strength, yields higher on treasuries, gold and the yen lower. They would be your main movers. Oh, crikey. I left that in last time. Sorry, that's wrong. The implications of a December rate hike, of a June rate hike would also be possibly to put the brakes on risk appetite. It is possible because the market is fairly strongly factoring in a June rate hike now, but certainly I think that you could see still some strength, certainly on the dollar, but mainly through treasury yields pulling higher, gold and yen lower. In terms of other factors to consider, I think the spike is always an issue in payrolls reports. Certainly with an inline report, the spike will tend to be seen. You'll see a move in the direction of the surprise, and then you can quite often see a retracement of that move. Now this was last month's dollar yen. Now you can see the headline payrolls report surprised quite strongly to the downside of 98,000, but then after that initial move settled down, the dollar yen started to recover. Why was that? Well, it's because earnings growth had improved, and ultimately earnings growth is what the market's looking out for. I mean, the market is fairly well sort of set in the fact that Yellen and the Fed have been going on about the solid labour market for a long time, but earnings growth is needed to sort of be sustained, really, and sustaining earnings growth is dollar positive, and we saw a pickup in earnings growth last month, and subsequently the dollar, after that initial headline number, the dollar started to recover quite strongly. Ultimately it sort of went down about 60-70 ticks on dollar yen, and then recovered about 80-90 ticks. So there was a big retracement of that spike, and what I've always tended to see in sort of looking at payrolls over the years is that you can quite often get sort of initial moves of maybe 10 to 15 minutes of the headline move or the initial move, and then you start to get the market sort of unwinding. So you get the spike unwinding after about 10 or 5-10 minutes, and you can quite often see a retracement, and if it is not a decisive payrolls report in terms of across the board strength or across the board weakness, you can quite often see that move retracing, and it can sort of retrace entirely. As you can see here, you've got a mixed payrolls report last time out, so you get the initial headline move and then you get the retracement on the earnings growth. So I would watch out for that. That's the initial thing I'd watch for, is that the move in the direction of the surprise on the headline payrolls number. So 185 is what we're looking out for, and then a sort of a retracement potentially if earnings growth is any sort of different to that direction. So we're looking for 185 on your headline payrolls. We're looking for 4.6% on unemployment. We're looking for 0.3% on the month for average hourly earnings, which is around about 2.6, 2.7, which would still be considered to be a fairly decent sort of growth on the year. Participation rate picking up from 63% would be good, would be positive. U6 unemployment, if that fell to maybe 8.7, 8.6, then again that would be considered to be a strong report. Now, what I'm going to do is just sort of move this so I can get some charts of the response, because we're going to get the data in a minute. Yes, do you get all of that? Do you get all of that in? Unemployment, there you go. Right, there you go. Right, okay, so, right, okay, now 211, so that's a strong headline payroll, so you're going to get spikes, dollar strength. You've got 4.4 on unemployment, labour force participation rate down, interesting. So, as I said, like the opposite you can see on participation rate falling, unemployment falling. Inline average hourly earnings, and U6 at down at 8.6. So that is dollar strength. That's a pretty strong payrolls report. I'd say all over. I'd say that's a strong payrolls report. So we are likely to see dollar strength. What I'm going to do is I will leave that with you, and I'm just going to tweet about this. Strong report. 211K. What was it? 185K expected.
Who took them downstairs? They were up here. But he said he's arranging for the printer to be connected.
Wow, markets have turned around. That's really interesting. Not really going with that. It's just very interesting. Should be dollar strength, but we're not really getting dollar strength. Early earnings. Sorry, I'm just sending this tweet. Right. So yeah, we're seeing the market sort of spiking around a little bit. Dollar yen spiked up and then down. Euro dollar up. Interesting. Cable up. Gold has rallied. Really interesting moves these are. The fact that they're sort of going against what you'd expect at the moment. The dollar is not holding on to the strength. Should be dollar strength, but it's not. Really interesting. Because across the board, as you can see, like 211, that's strong. Unemployment, that's strong. Average hourly earnings, in line with expectations. U6 down to 8.6. That's a strong labour market. But that should all be dollar strength and sort of maintaining expectations of the June hike. But the market is going the other way. Look at euro dollar. Really interesting. Dollar yen basically flat in the reaction. So not a huge reaction anywhere really. I mean, like 10 ticks up on cable, that's 10 ticks opposite to where it should be. 20 ticks up on euro dollar, again that's 20 ticks up on, against what the market reaction you'd expect. Even the Aussie dollar has sort of reacted positively when it shouldn't really be. DAX, and it's basically in line, isn't it? So let's have a look at these treasuries as well, treasury yields. Treasury yields falling on both 10-year and 2-year. That's 2-year at the bottom, 10-year at the top. Falling back. So you had that initial spike move. I think this is going to be this could be a spiky one where the market sort of reacts a bit with volatility, but without really sort of trending. I think that's what I'm getting at the moment from this. Let's move that one out of the way, and also that one. That's sort of what I'm getting at the moment from this. I think that it's likely to be that these initial moves are going to retrace. You've seen dollar yen not really moving anywhere really. I mean, you had a slight bit of dollar strength initially, but then retraced back to flat. That cable trade is already retracing back. I think what we're going to see is the market sort of confirming the June rate hike with this data, but not really showing any major dollar strength. I think that was what it would be taken, because that is a report that's coming up ahead of expectations. Right, a few questions. How about having a subdued reaction due to the French elections, Constantinos? Perhaps, yeah, perhaps. I mean, I don't necessarily think that the French elections are that sort of much of a market impact at the moment. Maybe they are, but I don't think they've got too much uncertainty. I think Macron is fairly well set. I think ultimately, yeah, You think it's earnings, Konstantinos? Well, maybe. I mean, average hourly earnings were in line with estimates at 0.3%. So it's a mild strength, mild dollar strength reaction. I think ultimately, I think the euro sort of has held up. Although I can't see the markets moving too much further, and you're seeing a bit of dollar yen strength finally again. I think we're going to see this sort of oscillating around on these dollar markets. DAX has gained strength, so the eurozone markets have taken this as positive, really, a positive response. But the euro's not really managed to gain too much ground. As I said, sort of 20 ticks up. Dollar yen basically buzzing around, not doing a great deal. Aussie coming back now. So yeah, and gold is sort of drifting off again. So it is sort of mildly dollar positive. I'd say take that as an inference. I mean, basically in the last week or so, 2 weeks, euro dollar and sterling dollar have been sort of moving against the dollar strength anyway, you could argue. I mean, dollar strengthening across the fact that gold has been falling, Aussie's been falling, Kiwi's been falling, and dollar yen rising. So I think generally speaking, it's pretty much in keeping with the sort of moves that we have seen in recent weeks, whereby the euro and sterling both outperform the dollar, which is interesting. But much beyond that, see, dollar yen is probably the one that surprises me the most. I would have expected dollar yen to sort of start to pull higher a little bit on the back of that, and it hasn't really done that. Not really a sort of great move that we've seen on this payrolls report. It's been fairly well muted, certainly initially. I'd still think that that euro and that sterling may well come back. I mean, sterling's only like 10, 15 ticks up anyway. Euro maybe 20 ticks up. So yeah, I think those moves may well retrace. And I think that ultimately, I'd still expect dollar yen to sort of find support off this payrolls report. Doesn't really seem to be doing a great deal to these markets, does it? And just drag in these. Why is that happening? The 10-year. Where's the 2-year? And the 2-year. Again, sort of limited reaction on the yields. Sort of that 10-year yield is sort of buzzed around, fluctuated. 2-year yield sort of pulled higher initially, but back. Seeing a bit of Aussie sort of dropping away again. Yeah, cable just drifting away, just a touch drifting away on cable. On the euro dollar, maintaining that strength. I mean, euro dollar has been strong. It did break out yesterday. Technically, that was a strong breakout. I'd say 109.60 is a really strong breakout support, and that has held on that payrolls release, isn't it? 109.48 as the low before bouncing. So it is interesting that the euro has maintained its strength against the dollar. Cable is sort of mildly higher. Dollar yen is still sort of fluctuating around. Gold fluctuating around, I mean, to a certain extent, nothing too significant in terms of direction on gold. I'd still expect gold to be under pressure, but I mean, to be honest, these markets had been trending so strongly and then started to turn around a bit. So yeah, I think it's a payrolls report that doesn't seem to have changed much in terms of expectations. Aussie picking up slightly. Again, I don't necessarily think that Aussie trade will continue too much higher. I'd say that's likely to retrace. I mean, it has just broken out, but I don't think it's going to be turning into a trend move. Don't think that's a market that's going to trend. Let's just turn that onto the 5 minutes, see what sort of, yeah, it's sort of up towards that resistance around sort of 74 figure area. It'll be interesting to see if it can continue higher. Let's put it on the hourly. See what. Yeah, that is a resistance. So if you do break out on Aussie above 74 figure, technically you'd open 74.15, but to be honest, I think this is a fairly sort of strong bit of resistance around this sort of 74 to 74.15. I think this is going to likely to hit the buffers and probably start to retrace again. I don't necessarily think that Aussie move is likely to last the distance. Sterling, nothing really since that initial move. Euro dollar still holding on to those gains. Dollar yen has dropped away again. It's a really interesting sort of reaction that the markets have given to this payrolls report. Nothing too decisive, but just mildly against the dollar, which is, as I said, not really in keeping with this sort of clutch of data. Maybe the fact that there was a downward revision of last month didn't really help the dollar, perhaps. But again, I think the market will take that as being a big one-off, really. I think that's a one-off. I don't really think that that's any sort of indication of how the labour market is going to be going forward. Sterling cable just sort of rolling over a touch. This little rally on gold I find is interesting. I'd still be looking to sell into strength on gold. Got a fairly decent area of resistance around 1234. I think that's likely to remain intact. I don't think that that's going to be going too much higher. Euro dollar starting to consolidate again. Yeah, this Aussie is starting to sort of consolidate as well, around that 74 figure area. I think that's a resistance. Cable again just sort of starting to drift lower a touch. Yeah, so really limited moves on this payrolls. Euro dollar just rolling over a touch. So does that mean we're going to start to see dollar yen bouncing? I think possibly. This dollar looks to be regaining a bit of ground. As I said, what's it? 42 minutes past the hour, so that's 10 minutes. So 12 minutes past the data. So you could start to see retracements, possibly. But again, there was such sort of small moves really that markets have not got a great deal to retrace. But yeah, very interesting. I think it's more of a report that really just sort of reiterates the fact that the market is going to be expecting a June hike, and I don't really see this changes a great deal. Yeah, not too much there, I think. Are we going to see a retracement in euro dollar? Maybe. DAX seems to be fairly solid. Nice trend higher on the DAX. Last few minutes. It's not a great colour, that, is it? But anyway, nice trend higher in the last sort of 20-25 minutes on the DAX, and breaking out again. DAX doesn't want to stop, does it? It does not want to stop at the moment. Sort of consolidating, it had been consolidating, but looking to break out again. That is, yes, sort of regained yesterday's high, isn't it? 649, 648. So it's basically broken out again. Really interesting. The DAX continues higher in front of this weekend election, which I think ultimately could well provide a bit of a sort of buy and rumour, sell on fact moment, perhaps for CAC and DAX. It'll be very interesting to see if they can hold on to these gains, because ultimately the market is pretty much priced in Macron. You might see a bit of a pop to the upside when all of the political risk has been removed from Le Pen victory, but generally speaking, I think that you're likely to see possibly limited upside coming through the DAX, perhaps. So sterling has sort of continued to retrace a little bit. You're starting to see that euro dollar market rolling over. It hit that high 91. It's now 10 ticks lower. It's only sort of 20 ticks up on the day. You're starting to see dollar yen turning higher. You're starting to see gold rolling over. So the dollar is starting to regain a little bit of that strength. and that comes with your treasury yields starting to pick up as well. So treasury yields starting to pick up, that's going to help the dollar. So yeah, retracement of those early moves seems to be beginning to take hold. Look at dollar yen. Look at gold. Not necessarily on the Aussie. Aussie's still holding on to those gains, interestingly enough, but cable retracing back, euro just rolling over, dollar yen rallying again. So yeah, you're going to get, I think, limited real reaction from this. So yeah, I hope that all that helps you. Now, thank you very much for taking part in my webinar today. I'm going to be doing a series of trading webinars on a daily basis in the coming weeks. So watch out for that. If you're interested, they're going to be around about sort of 11 o'clock in the morning. For about half an hour, I'm going to be doing sort of live trading. So if any of you are interested in that, come along and take part. So with that in mind, though, I'm going to be still doing my payrolls webinars. I hope you've enjoyed it today, and I'm going to do another one next month. So please return, and I hope you've enjoyed it. Now, with that in mind, I will leave you with my disclaimer, which, again, you should read and hopefully understand because of the live market information I've been talking about. But with that in mind, I wish you good luck in all your trading post payrolls, and I'll speak to you soon. Thank you.